In today's show, we're going to talk about the future of our property markets. It's important to understand what they're going to look like in 5, 10, 15 years' time and what sort of properties are going to be in continual strong demand so they outperform the averages. I'm going to do that in two separate segments. In the first one, I'm going to share with you something that's going to shape our futures. And it's not the normal demographics I talk about. You'll be surprised. And in the second segment, my regular Property Insider segment with Dr. Andrew Wilson, we're going to talk about the state of the apartment markets in Australia because we've had a building boom in apartments. Many people said we had an oversupply. We were going to have an oversupply that was going to create a crash. Well, in some segments of the market, that didn't occur. In other segments, it has. Let's understand what's going on and what's ahead for the future. And this week in my Mindset Moment, I'm going to tell you the story about the first car. What's that got to do with success and money? You'll find out. So welcome to this week's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator who has once again been voted Australia's leading property investment advisor. That's the fifth time he's won a similar award in the last 7 years.
I'd like to have a chat with you about one of the major factors that is going to shape our cities and our property markets in the future. Because, of course, as a property investor, it's a long-term game, and you want to own the sort of properties that are going to grow at wealth-producing rates of return in the future. Now, many are saying to me at the moment that, hey, we can't have the same sort of capital growth in the next 10, 15 years as we had in the last decade or so. It just isn't possible for property values to keep going up. I've heard that story before, and there are so many factors that could be involved that I don't want to predict exactly what capital growth is going to be in the future, but what I'm going to suggest is that what we should be looking for are properties that are going to outperform the averages. Now, there's no doubt that the significant growth that we've enjoyed over the last couple of decades in our big capital cities in particular have come about because of two major factors. Firstly, interest rates have dropped considerably. Even going back to the time of the global financial crisis just over 10, 11 years ago, interest rates were around 10%. And I remember the good old days when my home mortgage was less than 10%, had 9 in front of it, I was thrilled. So the fact that interest rates have dropped considerably, even if we earn the same income, means that our affordability has gone up, and clearly that has allowed us to buy more properties or bigger properties. At the same time, many households moved from single households to two-income households, and on that basis, again, there was more affordability. And then there was more competition amongst banks as well, allowing people to borrow. I know that's not the case recently, but there was a special big shift that made a significant impact on people's affordability that allowed us to pay more for our homes. Because remember, you and I are probably thinking as property investors, but 70% of the market are just owner-occupiers. Now, I shouldn't say that rudely, just owner-occupiers, but they're homeowners, and they're the ones that create our property markets, and they're the ones that drive our property markets. And yes, we have booms and we have downturns because of investor sentiment, but it's homeowners who could borrow more. But what's ahead for the future? Because in the future, I see a period of lower inflation, lower interest rates, and therefore lower capital growth. So when inflation was high and when I had to pay 9-10% for my mortgage, I had to get double-digit capital growth to be ahead. Otherwise, I wouldn't borrow money at 10% if I only got 5% growth. So I see a couple of major changes in the future, and one is a period of significantly lower interest rates. And even if interest rates double, the official interest rates double, we're still going to have lowish interest rates at least for the next decade, there's unlikely to be a major significant change. Now, if the interest rates went up, I'd be thrilled, because interest rates are only going to go up if our economy does so well, if productivity increases so much, if inflation goes up, if the value of our properties go up, that the Reserve Bank wants to slow things down, so they're going to raise interest rates. But I can't see that happening too much. And the other thing is that wages growth is likely to remain low, despite strong job creation and despite very low, world-class low unemployment levels. This is just something that's been happening around the world, that despite high employment and jobs growth, wages are not going up. What's that going to mean for the future? Well, despite business profits and the low unemployment, many people are not only taking home less money for how they've worked, but they're actually not getting as much bang for their bucks, because we know inflation is low, we're seeing those figures, but how does that account for the higher petrol prices that we got to pay and the higher energy prices? So I see, adding to this, some major workplace changes. A lot of existing jobs are really not going to be needed in the future. More and more jobs can be done, often better, by less people. And this means we're going to get a hollowing out of the middle class, and that's going to accelerate. There are going to be more jobs, more lower paying jobs. There's going to be more temporary jobs, more casual jobs. But don't blame Big Brother and don't blame the government. A lot of this has to do with artificial intelligence coming. A lot of this has to do with offshoring of manufacturing and other jobs. But it's all changing. Now, I read a great table from Michael Matusik, a property commentator from Queensland that writes regularly on Property Update, and I'll link to his blog in the show notes here, where he explains the difference that he sees in the distribution amongst the various jobs in Australia moving forward. In other words, he classed people as being either high-income earners, low-income earners, or middle-income earners, and it's really the trends more important than the exact figures, but basically what he suggested was, over the last 25 years or so, 30% of us were high-income earners, but it's actually dropped to closer to 25% now, and he sees in the next 25 years there's only going to be 20% of us as high-income earners. Middle-income earners, the majority of Australians, 50% of them, were middle-income earners in the past. It's dropping to 40%, and he thinks that's going to drop to 30%. And Michael Matusik's forecast was that the lowest income earners, which made up about 20% of Australians in the past, now about 35%, are going to increase to closer to 50%. What Michael Matusik wrote was a recent US study showed that 47% of existing jobs could be obsolete by 2030. And the demand for some 40% of the remaining jobs are likely to be halved over the next decade. And most of these job losses are expected in the higher and especially middle-income brackets. Now, these changes, if they're correct, could have some profound effects on what's going to shape our future, because wages growth used to be strong, but currently it's on the lowish side. And if you exclude the public service, where wages growth has been a bit higher than average, wages growth in private industry has been low. So, where are property values going to increase at above average rates of return in the future? It's going to be in those locations where people's wages are high and their disposable income is higher. Now, every census, the government breaks down every municipality by all sorts of characteristics, and one of them is income. So for years, one of the things our research team at Metropole have been following and logging is the wages growth in municipalities compared to the average for the state. So if you think about it, in the outer suburbs and the lower income areas where people's wages aren't going up much, there's going to be very little impetus, strength, opportunity for them to buy more property, to add to their homes. I'm not talking about investors. I'm talking about the homeowners who are driving our property markets. Fewer of them being able to afford to pay more means properties in those areas are not going to go up much. On the other hand, in those municipalities where wages growth is considerably higher than average, growing higher than average, they're going to have more disposable incomes. They're going to be able to buy the big cars and the televisions, buy new houses, renovate their houses, improve, increase the value of their properties. Now, this is not a social argument. There's going to be, could be lots of social problems related to this, but clearly for large parts of Australia, with lower wages growth, jobs disappearing, there will be no impetus for property value growth because the flow-through effect of the low interest rates, that's all gone now. The flow-through effect of two-income families has now gone. The only way people can afford to pay more is by having more cash. Some are going to have more cash because they're going to get better wages growth, others aren't. So what's going to shape the future of our property markets are going to be the jobs people have, the disposable income they have, and their ability to pay to live in the locations they want to live. They're the locations that you've got to select to own the right properties in those locations, appropriate investment-grade properties in investment-grade locations, because they're the ones that are going to outperform in the future. And just like the past, some properties are going to keep increasing in value strongly and others won't. You've got to own the right ones. In a moment, in my mindset moment, I'm going to share with you the story about the first car. And then in my Property Insiders chat with Dr. Andrew Wilson, we're going to discuss the state of the apartment markets, what the last great building boom has meant for the current state, and what's ahead so that you can understand what you should be doing if you're planning to invest in apartments. And if you're wondering what you should be doing if you're planning to invest, maybe you should be getting some independent advice from my team at Metropole. You've been listening to my podcast for a while now. You probably realise that it just doesn't happen. You can't just become a successful property investor. And it's a little bit too hard to do it on your own. It involves having a plan, having a proven strategy, and then executing that. And it's a bit hard to do on your own. I know lots of beginning investors try to, but what they miss out is the perspective. That takes years to develop. It's the sort of thing that money can't buy. So whether you're a beginner looking for a time-tested property investment strategy, or you're an established investor who's stuck and you just want to get to the next level, or maybe you're just wanting a second opinion about your current situation, why not allow the team at Metropole to help you build a strategic property portfolio plan that's going to give you clarity about what's ahead and what's realistic. Now, we always start with this for our clients. Some of our clients then go on and use our buyer's agent service, but even if you're not going to, wouldn't it be useful having a detailed plan with budgets and understanding what's ahead? Think about it. Wouldn't it be worth understanding what type of properties you need, how many, how much cash flow to achieve what your goals are? Wouldn't that be worth it? Wouldn't it be worthwhile if we could just explain to you the next steps and what your likely timeline is? So why not get the team at Metropole to help you? Go to metropole.com.au and leave us your details and let my award-winning team help give you some clarity in these uncertain times. Metropole.com.au. And by the way, we've got no properties for sale, so we'll discuss your individual needs and our unbiased strategists will help you formulate a plan or review your existing property portfolio.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset message, I'd like to tell you about the first car. Here's an interesting fact about the first car. The first car was invented in Germany in 1886, when there were no proper roads, no petrol stations. In fact, it was against the law. But Carl Benz launched it anyway. Now, some other interesting facts. Amongst the 50 greatest pieces of music ever created, 6 belong to Mozart, 5 are Beethoven's and 3 are Bach's. But in order to create those, Mozart wrote over 600 songs. Beethoven over 650 and Bach, well, I believe over 1,000. I'm sure you've heard the story that Thomas Edison had around 2,000 patents, yet only a handful would ever be recognised. And Albert Einstein published 248 scientific articles, yet only a few got him recognised for his theory of relativity. So the lesson for you and me is You don't always win, but every time you lose, you get stronger. The issue is most people are scared to even try. They're waiting for the perfect moment to buy the next property or to take up that business opportunity or to expand their business or whatever it is. No one likes approaching the bank for more money or stepping outside their comfort zone to start a business. No one wants the door slammed in their face or to see their efforts fail. I know, rejection's painful, but nothing is as painful as staying stuck where you don't belong. If you want to get to the next level, start before you're ready. No one's going to do it for you. Now, your fear of looking stupid is making you look stupid, because the only thing worse than inaction is seeing somebody dumber than you, less skilled than you, doing better than you. More and more Australians are trading backyards for balconies. They're happy to live in apartments, trading space, big front and backyards, for place, being in the right location. They want to be where the action is. They want to be close to amenities, close to the shops. In fact, apartments have changed the shape of our cities, and not just the CBDs or near CBDs. Now you go out to the outer suburbs, middle suburbs, and you're going to see apartment buildings along the main roads above the shops. In fact, some people say Melbourne and Sydney have Manhattanized. Look, if you came back to Australia after a decade, if you're an overseas visitor, you wouldn't recognise the shape of particularly our big capital cities. So have we been building too many apartments? Because for a while people have said there's an oversupply that's going to create a crash. Or are we building the wrong type of dwelling? And what's ahead for our property markets? That's what I'm going to discuss today in our weekly Property Insider chat with Dr. Andrew Wilson, Australia's leading housing economist. Welcome, Andrew.
Thank you, Michael.
Well, for a long time, people have been predicting a crash related to the unprecedented apartment boom of the last 5 years. I believe over the last little while, lower interest rates have driven developers to building these new dwellings, these new blocks. Migration has led to this. In fact, it's been in some ways fueled by the government, who is trying to move construction workers from the mining sites to our big building sites in town. But what's the position of the apartment market in Australia at the moment?
There's no doubt, Michael, that particularly in Melbourne and Sydney, we're at peak supply. It's a tough market if you're a developer trying to sell units in both those markets. Of course, it's sort of dovetailed with a hit to sentiment that we've had and other questionable policies designed to restrict investor activity, which has come just at the wrong time for peak supply now in the marketplace. It is a counterproductive, I guess, mindset to be railing against perceived overbuilding of apartments in our capital city markets. We've come through, as you said, Michael, a remarkable period of development for apartments in all capital city markets. Have had very strong high-rise development, the exception being Hobart. Of course, that was fueled by the lower interest rate environment, which typically activated investors, high levels of migration, demanding, of course, supply. You know, our overseas migrants come, a lot of them particularly from Asian markets or from Asian countries that favour higher rise living, apartment living. You know, this did fuel very strong and in times, I guess, speculative development. And of course, once that occurred, we had the usual doomsayers who, as usual, get it wrong, but they move on to the next theme of predicting, you know, cataclysmic outcomes from a perceived oversupply of apartment. But I think the interesting thing, Michael, is that the back end now of supply in the apartment market has dissipated. We have very low levels of new apartments coming through, approvals coming through. Did see a little bit of an uptick recently in the ABS data, but numbers remain quite significantly below where they were a year ago. I guess we're going to now move from this perceived oversupply to an undersupply, maybe sooner rather than later.
One of the factors creating the mismatch always seems to be the long lag times in getting development out of the ground. So developers have to amalgamate a site, they've got to get development approval, then they've got to pre-sell it, then they've got to get finance, and then there's long construction time. And what seemed like a really good idea 3 or 4 years ago, sometimes the market moves on and the cycle we've realised. And at the same time, other developers have had the same great idea, but it was over the last couple of years fed by a fear of missing out, and not only local investors, but also overseas investors and superannuation funds buying. But in the last couple of years, the government's pulled the welcome mat out from the overseas investors. They've given them extra taxes, extra duties, and they've made it a disincentive. At the same time as where China in particular was making it difficult to get capital out of the country. So that's one group of buyers who've moved out of the market. The local investors are having trouble getting finance, and particularly those who are looking for buying in their self-managed super funds. And some had the right idea. Others, unfortunately, were being misled by people with vested interest and should never have been doing that anyway. But the banks have got very scared with that as well. So we've actually lost a huge number of the potential buyers that were there a couple of years ago, Andrew.
Yes. Well, that's right, Michael. And as you suggested, the whole issue in terms of the mismatch between supply and demand in the apartment market is that the very long production times that are involved. At the end of the day, as long as population continues to grow, as it will, and migration continues to be strong, as it will be, reduced supply will only soak up those excess apartments that are in the market now, which we've actually seen quite substantially, as an example, in the Brisbane market.
Well, interestingly, much the same happened in Melbourne with all the high-rise towers happening around here. People said there was going to be an oversupply, but the population growth soaked that up very nicely, Andrew.
Well, that's right, Michael, and we're still seeing quite tight vacancy rates in Melbourne. And one of the reasons why, even though those vacancy rates have eased somewhat, has been a surge in first home buyer numbers in Victoria. Similarly, in New South Wales, which has taken a lot of demand out of rental markets. We've seen vacancy rates rising in Sydney. And having said that, when we look at other leading indicators of demand, such as prices and clearance rates, units are continuing to outperform houses, Michael.
In part, that's because as the investor market has quietened, first home buyers are taking up the opportunity to get into apartments. So it is interesting. Yes. Our preferences have changed. So Australians, as I started at the beginning, are very comfortable trading backyards for balconies, especially to start off. In the old days, people, I think, wanted to start a bit like their parents did and hoped to have a house in the front and backyard and a media room and all the appliances. We're becoming more realistic. I think our lifestyle's changing also because we don't entertain as much at home. We entertain outdoors. And as you said, the international population that's coming to live in Australia are expecting apartment living. That's all they're used to. My concern is the quality of build of some of the apartments, and the Opal Tower was a really good example of that, but there are others that have had trouble. I jokingly say some of these new buildings have been built out of paper mache. Others don't have good natural light. The apartments are too small. So we are building a lot of investor stock built for investors, aimed at overseas investors rather than investment grade. And that's the problem compared to the old-fashioned, what were called flats when you and I grew up, which were built solidly, 2-3-story walk-up, a higher land-to-asset ratio. What's missing in my mind is the middle area. We're building all the new apartments in town. We're building the house and land packages out in the outer suburbs, but the downsizers, the baby boomers, the young families, they're wanting more townhouses in the inner and probably maybe more middle ring suburbs, Andrew.
Well, look, you're right, Michael. It sort of gets back to that, what we were discussing about the mismatch between supply and demand. And we're seeing developments still coming into the marketplace that are designed, as you said, for investors. There has been a concern about the size of a lot of these apartments that have come, particularly in Melbourne, that are quite small. But again, the big picture is that the demand for housing, types of housing, is shifting. We're seeing now, and we will continue to see, apartment living being embraced by a different cohort. It won't be those, I guess, executive couples or first home buyers or single. So we're now seeing a lifestyle choice driving apartment living, as you suggested, Michael, moving away from the typical detached home on the fringe. The fringe now, I guess, has spread that far that it becomes a real issue in terms of quality infrastructure. There's now a growing demand force from empty nesters and downsizers in their, I guess, older age groups that rather than perhaps heading for the retirement village or heading north for the sun are now looking for another step on the property ladder. And that, of course, is perhaps an inner city apartment. We're also seeing families looking at the apartment market as well.
Well, I found most baby boomers aren't going to see change or tree change like was predicted years ago. They do want to downsize. And I remember in the old days, the idea was you'd sell your home and you'd actually get money and you'd be able to move into something smaller and have money left over. Doesn't work that way anymore. It costs as much to get a good townhouse or a good size apartment in the suburb. But they want to stay in the same suburb. They want to go to the same dentist, hairdresser, be near their kids. And it's really a town planning issue at the moment in the middle ring suburbs. In fact, they're the areas where there's minimal change in development. And as you said, they're the NIMBYs, not in my backyard, and others call them notes, not over there either. I don't want them in my area. And this is where there is a tension because more and more baby boomers are going to downsize and have got nowhere to go. So I guess some are staying in their homes at the moment and renovating them and doing them up instead.
But the point is, a lot of these empty nesters, downsizers, want to remain in the areas they are. But quite paradoxically, they've been the very energy that's restricted higher density in those areas. And now when they're looking for a townhouse or a villa unit, they can't find any that are reasonably affordable in terms of what they have the sale price of the family home. This is all part of the drive towards apartment living, Michael, which is, of course, the offset to urban sprawl in Melbourne and Sydney. But look, this is a transition from, I guess, our mindset for what is the desired residence, the desired dwelling. And we shouldn't be surprised that this is all part of the maturing of the urban landscape that we do see in European and larger American cities as well.
Well, if you were to live in New York, Paris, London, any of the big other world cities, you wouldn't expect to live in a home. You wouldn't expect to have a front and backyard. You'd be very comfortable living in an apartment. And so the nature of how we live in Australia is changing. And people don't really want to drive 2 hours to get home. They want to be able to get home quickly. And our public transport is suffering a bit at the moment too, as having difficulty coping with this. So I think all this is going to lead for more of a demand living closer to our CBDs.
The other thing we seem to forget about the apartment boom, other than, the scary stuff about oversupply, is the significant contribution that the apartment booms in all capital city markets, as I said, with the exception of Hobart, had to the local economies. I mean, this is a real concern for me with the collapse in apartments development coming through now. It's going to have a real impact on local economies. There's no doubt that the boom in the Brisbane apartment market helped to offset the end of the mining boom. A lot of jobs were created. Apartment development has a very strong downstream economic energy to it. Those on-site jobs flow through to many associated industries. That's what kept the Brisbane market ticking over in a period where the mining boom ended. And we've similarly seen the same thing in Melbourne, which has had record apartment construction. Now, that had a significant consequence for an economy that was really struggling with the virtual death of big manufacturing in Melbourne. We saw the end of certainly the car industry in Melbourne. We saw high unemployment in Melbourne coming through in 14 and 15, and that, of course, was a factor in the Melbourne market being quite subdued when Sydney was taking off during the beginning of the low interest rate environment. A lot of those factory jobs, manufacturing jobs, transferred across to construction. That genuinely helped to revive the Melbourne economy. And now what I worry about is, what's going to happen going forward now when we don't have that same strong level of apartment development fueling jobs. And there's no doubt that apartment development is a very rich source of labour. And as I said, works its way through the food chain of the economy, and we're not going to see anywhere near that level of economic energy in all our capital city markets that we've had previously. So where are the jobs going to come from? That's a key question, Michael.
What about infrastructure, Andrew? Our governments at the state level and federal level are now looking to spend on infrastructure. To me, that's going to create jobs. It's going to use local resources. And I like the fact that it's going to leave a legacy for the future.
Yeah, infrastructure is fine, Michael, but it doesn't create anywhere near the labour output that apartment development does. It's a different kettle of fish infrastructure in terms of job creation. It tends to be much more capital intensive rather than labour intensive, and it's certainly the reverse in terms of apartment development.
One of the things I like about the apartment developments that have occurred along the shopping strips in our middle ring suburbs is that it has revitalised those suburbs. They've pulled out the old shops, they've built shops below, gyms, service areas, and then people living above. So that's actually been great for the local shopping strips to revive them with the competition of big complexes and online shopping. And so while we don't like buying in those new developments right on the main streets, we love buying apartments, houses, townhouses, villa units a couple of 100 metres away, because you got all the benefit of the vibrancy of the local centres.
Oh, that's right, Michael. And of course, if you're getting more people per square metre in a suburban neighbourhood, that's more demand for services, for goods and services.
We're very lucky we're living in the best country in the world, probably in the best time in history, so we're doing really well. I think it'd be really interesting when we sit together and have this chat, a Property Insider chat again in 10 years' time, to look back and see how the shape of our cities will be very, very different then. We probably won't recognise them again. There'll be lots more apartments. We'll be living differently. And I guess we're going to be living longer, and most of us are going to want to be staying at home longer rather than going into retirement villages. So some interesting times ahead. Thank you very much once again. Look forward to our next chat next week, Andrew.
Thank you, Michael.
Well, we spoke a lot about apartments today, didn't we? But clearly it's our demographics that's going to define the sort of properties we're going to want to live in the future. And more of us are going to live in apartments, so you may as well understand what's going on. And if you're going to invest in an apartment, buy an investment grade property, not an investment stock property, one that's built for investors. If you got some benefit from today's show, why not tell somebody about it? Just like I'm trying to help educate you, make you a better informed investor, pass the message on to somebody. And if you want to find out more in between these shows that I now bring you twice a week, why not go to propertyupdate.com.au, where you're going to be able to get my daily commentary. And not only mine, you're going to get it from a whole heap of experts on property, finance, tax, structures, etc. Having said that, if you've got benefit, I'd also love you to leave me a review. And Hamish and Courtney did. And Hamish and Courtney, I know who you are because I remember you very, very well as very valued clients. But Hamish left a message here saying, "Hey, Michael, thank you so much for sharing your wealth of knowledge in property investment, business and mindset. You and your wonderful team at Metropole have helped us purchase quality investment grade properties, develop property and manage our portfolio. We're forever indebted to you. Regards, Hamish and Courtney." Well, no, Hamish and Courtney, you've been fantastic clients, and it's been fantastic to go along the journey with you. And like anyone who leaves a review, I'm more than happy to give you a copy of any of my books if you just email me. But having said that, I think you've probably got a copy of all my books, haven't you? But when it's your turn to leave a review, not Hamish and Courtney, I'll gift you a book. All you've got to do is email me, michael@metropole.com.au. So I look forward to catching up with you again. I produce these podcasts twice a week. In the meantime, spend your time wisely.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?